Okay guys, welcome back to the Quigley Quote. Brief video for you today. I want to give you an idea of my investment strategy. Now this is my plan, this is my asset allocation, this is where I want to be by the end of the year, I suppose, more than anything. And this is basically how I am allocating my money. And this is all of my assets, okay? So, I'll start with where I'm putting 40% of my asset portfolio. And this is in what I call them ETFs, because that's what they are. And that ETF means exchange traded fund. So I'm putting 40% of my cash into these funds that effectively they mimic the market more than anything. I might pick like an S&P 500 ETF, which is like the top 500 companies in the United States, and I'm putting money into that fund for the long term. This 40% is long term, almost like a pension, but it's meant to not be touched. I don't care about what happens in the short term. I just know from historical records it's going to go up roughly 5% plus per year, and other than having to pay tax every 7 years, I'm going to basically ignore what's happening and trust in the process. So that is where 40% of my cash is going to go. And then there's a few different tools, few different financial instruments that I'm going to play around with over the next while, where I'll be putting 5%. So the first one is gold. So I want 5% of my assets in gold, which, historically gold, there's no 10-year point in history where gold has dropped in value. So it's what historically, traditionally has been a safe investment. However, I don't want too much exposure to gold because I know it's not going to go up 10 times in 1 year. It generally just goes up maybe 2 or 3% just to make sure it beats inflation, and so it's a safe investment. So 5% in gold. 5% then are going to be in government bonds. Again, quite a safe investment, a very, I would say conservative approach, but just 5% because I don't want to have too much volatility in my portfolio, just in case there is a giant drawdown or there's an emergency and I need a lot of cash. I don't want to be too exposed to the stock market where there has been, history of a 30% drawdown some years when there was a recession. So 5% in bonds. Then I am putting 5% into REITs. A REIT is a real estate investment trust. Few based here in Ireland as well, generally going up 5% plus per year as well. It really depends on where it's domiciled, but the Irish real estate market is absolutely flying at the moment, which is a negative thing for me because I'm trying to buy a house here in Dublin, which just isn't going to happen in the near future. But that is where I'm going to put 5%, and it means I can be exposed to the performance of the real estate market without actually owning property myself. So that's 5% going in there. Then 5% are what I call, I suppose, the fund portfolio, my individual stock portfolio, which I will likely just have a bit of fun with. I am going to be following the acquirers multiple. That I don't know how many of you will be familiar with that. It's basically it's a strategy where I will link some content below about, because I'm still learning about it. I'm not in any sort of position to explain it or give any sort of financial advice, but it's a great book that I read, and there's a couple of books by the author as well, Tobias Carlisle, that I'll link below. Basically that's my strategy for individual stocks, but I'll also have a bit of fun with it, the likes of random stocks that I think might do well based on my own personal judgment. I want to mess around with that and see how much fun I can have and see how much luck and success I can have on individual stocks. That will just be 5%. And the next 5% then is cryptocurrency. So obviously, a lot of you will all have heard of Bitcoin, maybe Ethereum, there's a few other ones. Dogecoin, shout out to Elon Musk for that. I want exposure to Bitcoin. It's too exciting not to. And so I want 5% of my overall assets to go in there. Now listen, that's only going to be a few £100, I'd imagine, but it means I get the notifications on my phone on Revolut when it's going up and when it's going down, and I get to jump on the train ride when it comes to crypto. No one knows where it's going to go. I'm hoping it goes up because I've got a bit of exposure to it and because it's just fun following everything on Twitter. But yeah, 5% on crypto. Then I will be keeping 10% of my overall assets in liquid cash in the bank. mainly because I'm saving for a house, and so I'm going to need that cash there anyway when it does come time to apply for a mortgage. I don't want to have to liquidate any of my assets. I want to have the cash there, and so that is my plan, I suppose, for the long term as well, to always have 10% in cash. I know that year on year the purchasing power of money will go down, but at least I'll have that liquidity should there be an emergency. I'll have that 10% in cash sitting there. Finally then, guys, might sound a bit boring, but 25% of that portfolio will be in my pension, yet to be set up, but that is my plan for this year, to have 25% of my overall assets sitting in my pension. Now, I won't pay specific close attention to the report on my pension, but your pension is the most tax efficient way to invest money, in my opinion. That is how I feel from the limited research and knowledge that I've done. It just seems that because you're able to get, in a lot of cases, your employer will match it. You don't have to pay tax on the money that goes in there at that point of it going in. It just makes sense to let that cash accumulate over time. So that will be 25% of my overall portfolio. Now, by the time I get to 50, 60, 65 retirement age, I would love for that pension to be close to €1 million. That is my plan. Listen, no one knows what's going to happen. It might be 500 grand, but I don't want to be over reliant on that pension. Now listen, when you get to the age of 65 in Ireland, you get a state pension as well. It's like, 12 grand a year or something like that. I certainly don't want to be over reliant on that either, but they should be your bread and butter. I want to have those, but I also want to have the 10% in cash. And do the maths. If you've got $1 million in a pension, you should have at least a decent amount in your cash as well. And then I'll have my ETF portfolio, which should be doing relatively similar to the pension, considering it's going to be tracking the market that whole time. I think that'll do quite well. Now look, the pension should perform better because of how tax efficient it is, but at least I'll have the gold, the bonds, the REITs as well as I develop, and as the next couple of decades pass, hopefully I stay alive for those decades, I should be sitting in a good spot when it comes to retirement. So guys, that is my investment strategy. I'm no expert, disclaimer, I'm no financial advisor, but that is what I'm doing. I'd love to know what you're doing. Give me a shout. A lot of people drop me messages on Instagram about investing. I love it. I'd love to hear from you guys. Thank you for watching. Make sure to subscribe if you haven't already. We're aiming to hit 100 subs by the end of the year, and I'll see you in the next one.